So question 11 from the 2020 paper 2 exam. This one's all about disposal of a non-current asset when we've got time apportioned depreciation. So that's the heart sink moment when we see that. It's not a case of provide a full year's depreciation in the year we buy the asset and none in the year of disposal. We've got to sort it out sort of year by year. So Ming is a sole trader and has annual accounts prepared to the 31st of March 2020. And we've got the following information. A non-current asset was sold on the 30th of November 2019 for £7,000. So April, May, June, July, August, September, October, November. That's 8 months into the financial year that ends on the 31st of March. So just to check that, we've got December, January, February and March left. So 4 months left, which makes a year. The non-current asset had been purchased on the 1st of July 2017 for £16,000. And non-current assets are depreciated using the reducing balance method at a rate of 25% per annum. Now, because it's reducing balance, the easiest way to do this is going to be to just do it year by year. Whereas if it was a straight line, we could work out how many months and do it that way. Annual depreciation is time apportioned based on the number of months an asset is held by the business. So we've got to calculate the profit or loss on the disposal of the non-current asset to be included in the accounts of Ming for the year ended 31st of March 2020. So the asset was sold for £7,000. That's going to be the disposal proceeds. We know how much it cost, but what we don't know at the moment is how much depreciation there has been up until the time it was got rid of. So the cost happened on the 1st of July 2017 and it was £16,000. Okay. The depreciation from that date up until the first year end, which would have been the 31st of March 2018. So July, August, September, October, November, December, January, February, March. Don't be afraid to use your fingers. It's 25% of the cost times 9/12. Okay, so £16,000 times 25% times 9/12 is £3,000. Okay, that away from the £16,000 gives us the net book value at the 31st of March 2018. Then we've got depreciation for the year ended 31st of March 2019. It was there for all of that year. So that's going to be 13,000 times 25%. So 13,000 times 25% is 3,250. We take that off. That leaves us with a net book value of 9,750. Now that's on the first day of this financial year. So that's the net book value at the, what date are we on? 1st of April 2019. Then we've got depreciation from the 1st of April 2019 up until the day it was sold, which was the 30th of November 19. So it's based on the 9,750 times 25%, but 8 months worth, so times 8/12. So 9,750 times 25%. Is that right? 9,750 times 25% times 8/12 is 1,625. So the net book value at the date it was got rid of, 30th of November 2019, the difference between those two, oops, I got hit there, 1,625, it's 8,125. Now the disposal proceeds, on the next thing, we need to take into account, so it was sold for £7,000, therefore we've made a loss on disposal of £1,125 there. Little pound sign there just for completeness. Okay, so fairly straightforward really, just have to do it methodically, work through the transaction step by step. Now the second part of this question, it says that the following balances have been taken from the draft accounts for Ming for the year ending 31st of March 2020. He had drawings of 30,000, he had profit for the year of 42,817, and his capital at the 31st of March 2019 was 168,950. So that's the brought forward figure. I just realised I'm doing all of this in pencil, which probably doesn't video very well, so I do apologise if it's a bit faint. The depreciation charge for the year ending 31st of March 2020 has been included in the draft profit for the year, but the profit or loss on the disposal of the non-current asset has not been included. Now let's just remind ourselves that we've got a profit over here, a loss on disposal of 1,125. So let's just make a note of that. What it's asking us to do here is complete the capital section extract from the statement of financial position of Ming at the 31st of March 2020. Okay, so we've got the balance at the start of the year. So at the 1st of April 2019, it's this figure here that would have come from last year's statement of financial position. We're going to add the profit, okay, which is 42,817 minus the loss of 1125. So 42,817 minus 1125 gives us a profit figure of 41,692. And then we've got to take off the drawings. So I'll say less drawings, which is 30,000. We weren't told we needed to adjust that, but we could be told something about goods for own use. That would increase drawings. So we're going to add the 168,950 plus the 41692 and then take off the 30,000. So the figure there at the end is 180,642. Okay, so that's question 11 done. I shall do question 12 in a separate video. Thanks very much for watching, and if you've enjoyed the video, don't forget to like and subscribe so you get notified of future releases.